Steve, I want to start with you because we've talked about ESG investing before. I've taken you to say, in principle, sure, particularly on the environmental part of it, climate, absolutely, but there aren't that many opportunities. What are we seeing in ESG investing right now? Because it was very, very hot, and now there's a lot of questioning of it.
I think it's still certainly very hot in certain circles anyway. As you may remember from our conversations, I've always been somewhat skeptical of it as an investment tool. If you want to look at ESG principles as a shareholder because you believe that's what's right for the country, for your company, for yourself, for anybody, you're a shareholder, you're an owner, it's capitalism, you have a right to say, vote, do whatever you think is right. But if you look at it as on the theory that somehow you're going to produce superior investing returns by investing alongside of ESG guidelines or restrictions, or whatever you want to call them, I'm deeply skeptical. I've seen little to no evidence that suggests that that's true. At best, it's kind of a push. At worst, it may be counterproductive. I can give you an anecdote, which is a company like Unilever, which was way out in front on ESG issues. Maybe they got distracted, maybe they didn't, but they way underperformed. Now they've got an activist on their board, and so on. And so I just think you have to separate ESG as something you want to do as a shareholder for something that you think is going to actually make the company more money.
Larry, where is the line between ESG, or let's stick with environmental for the pros and purposes, because I think it's hard to quantify, at least for me, on the S and the G part, but environmental, where's the line between just ESG investing on the one hand, on the other hand, really being concerned about long-term risks, because there certainly are long-term risks for companies based on the environment and climate.
Look, I think that people should make investments largely on the basis of what the ultimate prospects are. I think the problem comes when people who really have an environmental motivation try to attach an economic motivation and make economic arguments that aren't really very strong. I think there's been a whole movement in the central banking community to start focusing on what they call climate risks as if those were central systemic financial risks. And I don't think the evidence has ever been produced that genuine concern about systemic financial risk of the kind we had in 2008 during the crisis, of the kind that reared its head in the immediate aftermath of COVID, that is something that is likely to come from climate issues, seems to me to be a quite remote risk. And I think a lot of the enthusiasm came from people who couldn't legislate things about climate through the front door, and so they want to try to legislate them through the back door through central bank regulatory policies. And I'm not really very enthusiastic about all of that. And more generally, I think some of what little evidence there is of positive returns to environmental investing, I don't think reflects so much that it's a way of picking companies that are going to outperform. It's the fact that this was a growing movement, and so first companies that met certain green tests had a little bit of green investment, and then a lot more green investment poured into them, so their stock prices went up. But it was really driven by the pressure from the investors, market price pressure from the investors, not by anything about the underlying fundamental realities of the company. Well, I think there's also a danger. I think there's a danger in this, which is that I think many in the business community, or at least some in the business community, celebrate these processes of their own making pronouncements of one kind or other and encouraging various kinds of investments. And they think that if they make enough noise in that direction, they can avoid strong public policies. My sense is that this is not going to be resolved without strong public policies. And a lot of this business cheerleading has a bit of a subtle motive to suggest that the problem is being addressed without the need for strong public policies.
So, Steve, just last word to you here. Larry raises an interesting prospect. Is it possible that some of the rush to ESG investing, because we saw a lot of people saying they're outperforming, ESG investing is outperforming the S&P 500. Now it seems to reverse. Was it a rising tide that is now going out?
Look, I have, as I said, I have not seen a lot of evidence that ESG investing has ever outperformed or is outperforming other ways of investing. I think, as a matter of pure investing theory, you could argue that if you constrain the kinds of investments you're willing to make based on a set of criteria that aren't necessarily directly related to profitability, all things being equal, your returns should be lower. And again, I'm not advocating going out and investing in a lot of companies that are environmentally dangerous or polluting simply because you might be able to make more money. I'm simply saying that you have to be careful about how many different boxes you try to check in the course of investing. But I just want to say one last thing, because I think Larry touched on a really important broad point. I think as a society, we're looking to other institutions, whether it's the Federal Reserve or central banks, or whether it's corporations or what have you, to solve problems that Washington is not willing to take on. And I think we need to push back in the other direction and say it's not the Fed's job to solve every problem. It's not companies' jobs to solve every problem. The executive branch, the legislative branch have to step up and get some stuff done here.
Yeah, I suspect, Larry, you'd agree with that, just briefly.
Yes, absolutely. I think that Steve's making exactly the point that I'm making. I would add that I think some of the motivation for some of the happy talk in the private sector may be to discourage public efforts, which they don't want to see. That's why I was kind of glad to see Larry Fink signaling that he thought strong public policies were necessary.